we will do a quick round of introductions, and then we'll get started off. It's lots happening in India, and I'm an Indophile. You probably know that. This is the only place where my head can go like this, and no one can complain because everyone knows what I'm saying. But there's so much happening in India. You probably know this better than me because I get to India maybe once in 5 weeks. You're living over here. I come here and I see so much positive changes happening. We will try and cover some of that. We've got challenges, don't get me wrong. But in spite of the challenges, we've got many things happening. My name is Shankar. I'm part of an organization called BAFT. BAFT, for those of you who don't know, is Bankers Association of Finance and Trade. We're a Washington, D.C. based advocacy organization, so we're not for profit. We are about 103 years old. Not me, the organization is 103 years old. I started my life in India with a couple of the banks over here, including Bank of America and subsequently Standard Chartered. And I'm very, very connected with what's happening over here. But mostly I like to listen to people. So I've got a fascinating audience. Let's begin with you, Annapurna. Yeah. I think you can keep going. No, you can keep going.
Can you hear me? Great. So my name is Annapurna. I take care of the treasury, risk and insurance in ArcelorMittal Nippon Steel.
So my name is Amisha Shah, and I'm associated with Reliance Group of Industries and currently working with the telecom sector, Reliance Jio Infocom.
My name is Aditya Bhavik, and I take care of trade for Kotak Mahindra Bank.
Hi, I'm Toral Doshi. I'm a partner with financial services in EY. I lead the entire transformation on corporate banking, trade, and treasury.
Hi, good morning. I'm Sanjay Sharma, and I head the digital innovation for trade for ICICI Bank.
Thank you. So you can see not just diversity from the way I mentioned it when we started off, but we've got bankers, we've got a couple of companies, we've got a consulting organization. So I'm hoping this will be an interesting session, but if it gets boring, you can also ask questions. We will probably take 2 of them, either through the course or maybe towards the end. So keep your questions ready as well. Let's get started. One of the very recent changes that happened was something called SRVA. Anyone knows what SRVA is? If you don't, I'm happy to spell it out to you. We try not to use acronyms. The SRVA is a special Nostro accounts that the regulatory changes. Rupee Vostro account. Thank you that was just announced. There was a lot of excitement in Singapore. Why? Because exporters could open rupee accounts, which were effectively for you could use it for cross-border payments, you don't need to keep it in India and so on. But I don't know as much as perhaps Aditya. Is that your forte? Can we call it that?
I can definitely take that. So once we are saying SRBA or Special Rupee Vostro account, what we are trying to do, in a previous session, we just spoke about whether dollar is the only currency for trade or are there any currencies. Now, if you are looking at China, what they have done, they have systemically developed their currency as a substitute for dollar. Now, why can't we do that in India? Now, SRVA is a step towards it. Now, when we had a AD conference probably a year back, what RBI is looking at is actually making a strategic shift, and this is probably a step towards it. Just to give some numbers, probably 123 odd correspondent banks are dealing in SRVAs with 156 accounts. Okay, and around 30 Indian banks actually carry SRBA accounts. Now, probably I might be wrong, but as of December 24, 1.6 billion rupees was a SRBA balance. Now, is it sufficient? It's a step. It's a right step, but it is not sufficient. Probably we need to grow this much, much bigger, is my thought around it. And at the same time, what will make it grow? So yes, it has to be seamless. Just another thought probably. Why can't we look at a ACU kind of mechanism for rupee settlement? If we are going to look at that, or if we are going to make this entire SRBA process, INR invoicing, settlements, utilization of funds, yes, we are looking for a better future, better rupee managed trade is what I think. Probably somebody wants to add. Feel free.
It's fascinating, and I'll openly. Anyone wants to take this up? Good. Okay, I'll give you a point, and this is no offense to anyone who would get offended with this statement. Okay, I follow the RMB trade digitization. I was part of that story 10 years ago. Today, RMB is the second largest trade finance currency. They unseated euro. This is not me saying it. If you follow me on LinkedIn, you'll see that I post this. This is Swift statistics that's come together. But here's the interesting part, and this is the one that might offend people. Guess which country entered the top 10? Come on, which country? Where are we? And who did we unseat? Take a guess. Any guess. One currency that we unseated. GBP. So we are now the 10th largest trade finance currency as measured by SWIFT. I'm qualifying all this because there would be people who would have a different view. SWIFT statistics mentions this, and for the third month running, the Indian rupee is the 10th largest. Yes, we are behind Thai baht, we are behind Indonesian rupiah, and a few other currencies. So yes, to your point, Aditya, is a long way to go. But guess where we've entered? We've entered that list. In a few months' time, or maybe the next time we do GTR, I'm hoping we'll be a few levels higher. And the reason I'm mentioning this is not, again, the India story is rocking. You all know that, I know that. But it is now starting to get visible in numbers. Just on a similar trend, maybe I can ask the draft master circular experts, and Annapurna, you want to talk a little bit about this potentially linked to the previous theme as well. Do you want to pick this up? Yeah, just keep going.
So on the draft master circular, I'm sure some of you might have already seen it on the RBI website. If not, I would urge you to go through it, and I hope there is still time for people to respond, and you should give your feedback as well. Especially for heavy exporters here and project exporters, it is a very, very useful circular to go through. So while there is a lot of impetus from the government to kind of push forward international trade, there are certain positives which have come out in the circular which should benefit us. But I would also like to call out some of the things that you might want to perhaps look at. There are restrictions which are coming in now that up to 25 crores, you're allowed to kind of not have to, you can keep an import advance outstanding up to 25 crores. However, if it is beyond the contract period, any further advances will have to be against an international LC. This wasn't the case earlier. And so I feel, in my view, it is probably a step backward, which again, I'm hoping that, the correction will happen. Likewise, the same has happened on the exports as well. And in exports, there is no demarcation between capital exports and current account exports. The same yardstick of 25 crores has been wrapped there as well, which ideally capex exports should be excluded for export advances. 25 crores is a very small sum. And generally, delays happen in capex projects. While we can say we will implement something in 36 months, there is bound to be delays, and hence there should be some leeway given there as well. Few other things which possibly can also come better, I would say, in the circular is when it comes to merchanting, and given we are looking at also significant globalization of Indian trade, internationally merchanting, you could have different AD banks on both sides. You could actually do third-party payments as well. Those things are still not getting clarified in the circular, and perhaps I would urge you to take a look at it and then give the feedback. I think the more the feedback, if you file it as a use case, will be useful for them to reconsider as well.
Wonderful. Amisha?
Yeah. So I think there are very few corporates here and more bankers here. But I would make a request to all the corporates also to go through those draft regulations, give your inputs, because I still feel that there is no visibility, standalone visibility to the importers and exporters for their imports and exports which are there. And it is fully dependent on the ADs. So if we can together, we just want a visibility. It's not that the ADs don't support. They are beautiful people. They always support us. Without them, we can't do anything. But yes, as importers and exporters, we need a real-time visibility. What is getting reported, what is not getting reported. That visibility is not there currently. One thing is that, and the other thing is on the exports. Yes, There's one more draft regulation I have read is all the service payments need to be reported under IDPMS, EDPMS. So I think that would be a little painful going forward for both of us, for the banks as well as corporates. So please give your inputs, still time.
Wonderful. And just so that we are all on the same page, acronyms, IDPMS.
IDPMS, I think it's a import data processing management system and export data management system.
Sure. I just want to make sure that we are all comfortable with terminology, given that we were not all be very familiar with it. So that's good story. By the way, anyone from the regulators over here, and don't feel compelled to say that you're here? No? Here's what I want us to do. And I mean it. Please can we give a big hand to our regulators? And I have nothing to grind, okay? I can tell you, I talk to regulators all the time. The regulators over here are amongst the most proactive, and they're willing to listen to you. Some stage, I'll tell you a story about how my UPI didn't work over here and what happened subsequently. And this was with one of the very senior colleagues in the Reserve Bank who helped me out. The point I'm trying to make is they're willing to listen. Okay, let's move on.
I would say, Shankar, that I think we have to share mics today. So I would say, Shankar, that this is among the very few regulators who shares draft circulars, gives us lead time, and I have also seen in the past that they have shelved certain circulars thanks to feedback. So they are very, very open and listening, and we should definitely appreciate that.
What?
Go ahead with Amisha's points, okay? And one point which you made on regulator. EBRC probably is the right step, what has been taken by DGFT, where direct access is given to customers. Now, it's a very valid point, EDPMS, IDPMS, why can't outstanding be shown to customer? It can be a review access, or it can be an updation access also, with a respective AD actually checking that post facto. Okay, there's no harm in giving that access. I know the system framework, the way it has been designed, is not very supportive. While I'm not a tech person, but I can tell you because it was designed for a different purpose. But at the same time, when we are looking at trade innovation, when we are looking at a unified portal or a BharatNet kind of thing, why can't we look at this? And I believe it will be a step which regulator will be taking towards giving access to the customers or to the importer exporters so that they can actually verify their details upfront. In the meantime, ADs, many of us as banks, we are trying to give that as a feed on our respective portals, okay, that we have done in Kotak, we have done in, there are other banks who are doing that. But yes, it's a required step.
Wonderful. And that your statement leads me to our next question, where I want to bring in both Sanjay, who occasionally can become Sandeep, as he knows from my last session on GTR, and Toral. I thought I'd say that right up front in case I do call you Sandeep for any reason. So you won't get offended.
No problem at all.
Okay, just blame it on age or gray hair or whatever. But Sanjay, trade digitization. And this is something that I'm very passionate about. I see this happening in different parts, and there is things happening. How is that happening from an India context? Legislation, what are critical elements? What's really happening in this space? If you can throw some light, and from an ICICI construct, but also your own personal interest. I know you take a lot of interest in this.
So before I start on trade digitization, I'd actually like to take a minute to say, the world-class digital infra which India has created. Let's talk about things like GSTN, e-invoice, and iSgate. They are truly comparable, and they are a world apart, which has also led us to, making massive steps in digitization of trade. Of course, for us to harness the full benefit of this digitization, I feel there are minor tweaks if we are able to do in our legislations, we'll be able to harness the full potential. The first and foremost, I feel, is getting the legal acceptance to the digital trade documents, which are the cross-border bills of lading, the promissory notes, and the warehouse receipts. They need to get aligned to the MLETR guidelines. If we are able to tweak our legislations like the Contract Act or the Evidence Act and the Negotiable Instrument Act, this will give a full acceptance to the digital trade documents, which is currently the final piece which I think which is missing. Overall, basically, we need to tweak our legislations to have an electronic transfer of title and ownership of goods. This is the missing piece, which I feel will go a long way in digitization of trade. We've created the digital infrastructure, but a minor miss is the interoperability, which is there, which we are lacking today. If they are aligned to the global standards, we can design an interoperable platform which has all stakeholders inside, like your banks, ports, customs, trade bodies. The Bharat Trade Net, which was recently announced in the budget this year, is a first step in this direction. I think which is definitely going to be a good move in this direction. Overall, I think there is a lot of progress which is being done. And as we said, the regulator is definitely listening. And we are in the right step in this piece.
Wonderful. And let me get Toril in away. But before I get Toril in, MLETR, everyone knows what MLETR is?
Sorry,
Model law.
it's the model law for electronic transferable records.
Yeah. And these are terminologies you'll keep hearing, especially in the trade finance world. These are laws. And by the way, Sanjay, to your point, yes, we've got a long way to go, but it's only 10 countries or maybe 12 now who are signed up for an MLETR, right? France and I think the UK just signed up recently. The US is still not there. I know BAFT is working very closely with the regulators over there to get us going. But let me get in Toril over here as well to see her perspective on how she's seeing digitization.
Thanks, Shankar. So, couple of points, right? When we're looking at it from trade digitization perspective, and you want to look at it from an end-to-end perspective, Bharat Trade Net is a classic example. There is no country today which has implemented this from end-to-end perspective on digital side. And the entire endeavor of government to come up with Bharat Trade Net, and obviously it's a journey of development as well as adoption, but that entire thought process and objective of having an end-to-end visibility, digitization, transparency in trades, and thus some of the reporting requirements that my colleagues here were talking about, is something that is going to come true as this gets implemented. Each organization and each piece in the entire trade life cycle is working on digitization. When you look at it from corporate's perspective, they are doing their own digitization journey. When you look at it from 81 banks' perspective, they are into their own digitization journey. When you look at it from customs, you look at it from digital records perspective, they have their own digitization journey. There are 28 parties today which are working across the trade life cycle, which needs to be integrated for Bharat Trade Net to come true in its end-to-end vision. This will be right from customer getting registration done for export imports to the end settlement and reporting. This needs to be obviously done through the right technology. We all talk about blockchain, then we laugh about blockchain, but somewhere we will have to come up with this technology for this to come true. And to my mind, the entire legislation, the ecosystem that is required for this to come true is the topmost priority today with the ministry.
And you think it's working?
It is working. They are in fact looking at the entire ecosystem revamping because we have so many regulators. So for example, when you want to look at it from trade insurance perspective, the regulator for insurance and regulator for trade finance are different sets of people. The implication of trade insurance, is it baked in for the capital adequacy release of the banks? No. And thus the entire pass-on benefit to the MSME market, which requires it the most, both from AD1 perspective because of their credit authenticity and evaluation, and from MSME perspective, both are not there. So they are actually looking at the entire ecosystem revamp in terms of saying, how do we streamline this and have an overarching governance around this to ensure that we are achieving what we require from Bharat Trade Net perspective.
Wonderful, Atul, and that's a great perspective. Thank you for that.
Yeah, in fact,
you said 28 parties. So for all of us to remember, 28 parties have to be part of the digitization process. This is not easy, but when it gets done, it's going to be a powerhouse. Sorry, Aditya.
So what I was saying is that's a differentiator, ecosystem approach. Now, very few regulators are actually thinking in this particular direction. UK probably is the one who is trying to do a single window by 2027. Okay, Singapore, yes, to an extent they have done, but still there are three different things to take care of, okay, when it comes to unified portal or a single window for trade. Now in India, the start with Bharat Trade Net is definitely a very, very valid start. Yeah, remember, you can see a ant line moving and it looks very beautiful. But here, elephant is moving. So it will take time, but yes, it's an elephant moving. So I'm very positive about it in terms of an ecosystem approach, what our government or our regulators have taken. I'm actually very, very positive about it. The second aspect, because to my mind, there are three pillars to entire trade innovation and digitization. One is ecosystem, Toral spoke about it. Second is technology, Sanjay spoke about it. And third is legal framework. Now, unless and until we actually manage progress on all three of them, we will still be doing probably one single import or one single export. It takes 10 documents and 8 days for a customer to process that. Now we need to move that online, real time, with a unified portal. That's the end game.
And let not everyone think we've all drunk the Kool-Aid. We've got challenges. We were talking about the Threads platform coming up in the Gift City. Everything works very well, except when you have to go to the Gandhinagar courts. Okay, if anyone has been part of the court system, it's not easy. And look, I think we have to be honest about it. We have to be candid about it. We have to see how we can tackle it. And you know what? I think our governments now are seized around this. They will find a way. But at this time, we've got some of those challenges coming in as well. I did want to just move on. Sanjay, very quickly, I know we spoke standardization and global rules, etc. But anything that you want to add to that? I know we spoke MLETR. Anything around that you think we should look towards, especially as you look at promoting INR and...
So standardization, obviously, it creates friction as far as global, not having standardization in the global trade laws, it creates friction as far as trade finance is concerned. How are banks mitigating this? From my perspective, if I have to say that, banks have already started leveraging technology which is there to build, let's say, a multi-modular compliance framework to see how they can kind of work on the various data, KYC, and documentary requirements across geographies. Banks have already started tying up with global platforms which can help provide technology-led solutions to customers. These platforms are designed in a way that, they provide a standardized document flow to the customer, and it provides a legal acceptance to the documents across borders. To work in a more agile manner, we have started working with startups, fintechs. Digitizing the supply chain solution is one use case which I can point out, where we've actually taken a step ahead to avoid double financing. And the UAT environment which has been created by RBI and IFSCA, it helps us to do cross-border testing in a very, very controlled environment. So these are a lot of steps which are being worked on as far as innovation is concerned, and this is how banks are, kind of moving around in that area.
Wonderful. Yeah, Misha?
I just wanted to make one point here. Am I audible? No, you can take this. Okay, am I audible now?
Yes.
Yeah. So the point what Sanjay was making is that the banks are working with fintechs on various platforms for standardization of documents. But one concern from the corporate, different banks are working with different fintechs and different platforms. So again, the standardization is lost. So that's the biggest concern. So here, I would request the regulators to bring up with a common platform where there is a feasibility of standard documentation. Basic documentation like filling up the LC application form differs from bank to bank. Just because they have their internal policies which needs to be made, internal terms and conditions that needs to be met. One LC is LC. Why does it have a different terms with a PSU bank, a private sector bank, a foreign bank? It has to be a standard terms and conditions. So unless it comes from the regulator, even the banks are not help. It will not help the banks also. So this is one message what I wanted to pass on to the regulators, that okay, fine, we are working towards standardization, but each one is working for their own standardization and not for the benefit of all.
Wonderful, and this is from a practitioner who's got loads of experience working with the largest companies in India. Let me move on, Annapurna, to you and talk about export process digitization. When we had a pre-call, there was conversations around some of this specific persistent bottleneck. What kind of innovation, regulatory clarifications are banks prioritizing? And by the way, I'm reading this out because I did take notes. Actually, I got someone to take notes for me. That someone was AI. I'm a big fan of AI. I got AI to write my questions after the brief. So if you all think I'm very smart, I'm not. I'm using technology to my advantage. Okay.
They didn't circulate the answers, although. Let us just clarify that.
So Annapurna, let me move on to you and ask you to comment on this export procedure.
Yeah, so in fact, taking on from what Sanjay said, while of course on the import side, and I'm sure many corporates here on the room would have already done paperless imports, right? Because it has been there for the last 5-6 years, completely paperless. Certain banks will ask you as low as 7 fields, some banks will ask you as high as 21 fields, but still you're giving the data in a completely electronic form. You're not submitting anything physically to them or digitally for that matter. Whereas in the kind of exports, if you look at it, today nearly 50 to 60% of the process is manual. So as a company, we have connected ourselves to Tresix. Using Tresix, we are able to automate a lot of our tax filings and reportings, which is needed for exports. However, when it comes to bill of lading, shipping documents, everything has to be passed on manually to the banks. Now, and add to it the marine insurance as well. Now, if I were to look at how the India went ahead with the e-KYC process, right, with the unique numbers, and you're able to do your entire KYC digitally, where somebody is fetching your ID card, your address, various other information. Some of us have even put all our licenses, etc., on one platform. The similar way, if I were to look at it, eventually, can regulators insist that insurance companies load their marine insurance onto a platform? It is available digitally for banks to pick up. Similarly, can it be done for the bill of lading? Probably BharatNet is one example. But today, as we stand today, we do definitely have a long way to go. And I actually wanted to just address Amisha's point as well on the LC. What we did was, last year, when we tried to build up our letters of credit module in S4HANA, we went ahead and asked all the banks, please give us your entire LC application form. We went through all the fields and we loaded it all on S4HANA and said, depending on which bank wants to pick up my API, those relevant fields will go to them, but my form on the platform will have all the fields that is required for the banks. We did initially try to standardize it, like what she said, but then beyond a point, we just gave up and said, let me load everything, and then the banks can come and pick up whatever they want through the API platform.
Now, just so I make sure I heard this right, you didn't say S400, you said S?
It's S4HANA, it's a SAP product.
Just want to make sure, I mean, these days when you listen to the news, you hear various nomenclatures. I just want to make sure there's no cross-application happening over here.
I just want to make one point here, as Annapurna said, that we are going paperless import payments, but that's only for material. Yeah. Service import payments are still in physical form because of the documents. You still have to submit a Form A2 in physical. You still have to submit 15 CACB. However, the income tax portal is like online, but still we need to print that, sign and submit it to the bankers. So
interoperability.
As you can see, the panel is now getting friendly with each other as well. They're exchanging ideas right here on the platform. But I've got 15 minutes. I want to make sure. Yeah. I want to make sure that we have maybe one question or two for the panel, and then open up to the audience for questions. If you don't have any, then I'll keep going on. I do want to cover. I'll skip to MSME financing because I'm very fond of trades. I know some of the companies that do that, and that story has been wonderful. But my question, perhaps to Toral and to Aditya, maybe Aditya, you go first. targeted regulatory adjustments, etc. What's happening in this area?
See, there is definitely a development. Trades is one such, where with the three platforms and fourth, which is coming up. There is good traction. There is availability of finance at much competitive rates to MSMEs. But again, is it sufficient? Looking at the overall trade and exports, okay, and the share of MSMEs, the portion what is getting service through trades is minuscule. Okay, so we need to have a good amount of development there. It's a hard work because it's organized and unorganized. Both sectors are there, okay, where which need access to finance. Now there, what can be done is probably one, a regulatory framework or the framework which is very simple, system which is very, very easily accessible and self-learning kind of thing or self-intuitive kind of things is what we can look at. And the third thing is access to external world in terms of counterparties, in terms of risk mitigating products, and various variants which is being done for probably large corporates and MNCs and conglomerates. If we can do part of it to the MSMEs, probably that will move the needle. That's my thought on that.
Thanks. Told you.
See, let's understand this, right? When we are talking from export finance perspective, MSME today contribute to about 43 to 45% of the total export finance that is happening from country. When you look at it, let's say when I want to, so what are the challenges that MSME face? And MSME is actually a very large word. It is micro, small and medium enterprises. 100 crore, below 100 crores have different sets of challenges. Above 100 crore to 500 crore have different set of challenges. These are basically the category of customers who are corporate equivalent by nature. So the requirements are like corporates, but the behavior is like retail, right? The volume and the ticket size is much lower and the number of transactions are much higher. So the infrastructure that is required to cater to this MSME is definitely something that one needs to look at. And I think most AD banks are looking at it. They are focusing on this. We've realized through this recent quarter in terms of the NPAs that have been observed from MSME perspective is something where people are working on. And the transaction banking side of it is obviously gaining more importance because of the credit defaults that you are seeing on MSME side. But when you look at it from overall perspective, today what is it that is a struggle for MSME, right? Competitive rates. You have platforms like Trades which has taken time from adoption perspective, but the adoption is high. But when you look at it from participation perspective, which are the banks who are participating the most? It will be highest number of public sector banks which will be financing. The major portion is there because the cost of funds are very, very different between public sector banks and the private sector banks. And the challenger banks. Challenger banks' business proposition is that my cost of funds is higher and thus I will cater to MSME market because that's where my balance sheet manages the NIM. Now, if you take it away from that, through this platform perspective, what are they left with? They are left with people where you do not have sufficient amount of data. Data is a struggle for banks to finance these MSMEs. Second is the entire focus on factoring, right? Today, when you look at it from factoring perspective, that market for us is still very, very niche. It is very, very low as compared to some of the developed economies in terms of the providing finance to MSMEs. And the third part, when you look at it from MSME perspective, is the entire behavior and understanding of banking, right? They don't want bankers chasing them. They want business partners. मुझे मेरा धंधा करना है. Whatever minimum I need to do is what you tell me. I don't want a relationship manager countering me, calling me every day. That's not what they want. But when I want bank to help me, they should help me, right? Which is where this entire ecosystem concept comes in play. See, how are banks partnering with them? Today we have learned corporates where the people understand trade, people understand FX. MSMEs, in fact, till micro and small, may not be understanding that. So what is it that I should hedge? What kind of treasury advisory can I give to these clients? Those are some of the important factors, unlike the usual corporate banking ask that you would have, is something that needs to be focused on. Once you have this entire ecosystem working fine, automatically people wanting to do this is going to go up. It's not that banks are not working on this in this direction. Most of the banks are working in this direction. But I think these are some of the nuts and bolts for MSME.
Absolutely, and this is the holy grail of trade
The
finance.
second part is the entire trade insurance. This market needs to change. It can't be only ECGC and a very minuscule private players providing trade insurance. If you don't provide it, MSMEs will struggle to get the financing at a competitive rates. And if you don't provide that, that's not going to help the vision that we have as a country from export
Probably
perspective.
a whole panel can be devoted to that. But I just want to make sure that we get audience questions, if at all. Anyone has a burning question? I'll also ask my panelists to keep their closing remarks in their mind as we come to it. If you don't get questions, I've got a couple for the panel. Anyone has got any questions? Normally not a shy audience. Pinaki sir.
All the difficult questions are going to be answered by Shankar, so don't worry. It's okay.
No, the moderator, we are not supposed to ask any questions. That's the understanding.
Thank you.
No, I agree with the lady from Reliance. I remember in 2014, there was a similar question, the whole the credit facilities agreement. If it's makes simpler and it is unified, uniform, it's easier for the guys to understand. All the legalese, only the guy who has drafted understands. Now, LC, you have taken it to such a level, only the guy who drafts, he or she also doesn't understand. So, I agree with the lady from the corporate that, that's whatever the banks are saying, that's wonderful. But 10 years back is kind of a deja vu feeling. And Mr. Shankar, as on date, he was smarter than any AI. Rest assured on that.
You're very kind, sir. Any other questions? Gentlemen there? And if I can get the panelists to be ready with their closing comments, perhaps after this one.
Yeah, hello. I'm Sunil Mehta. This is with reference to MSME financing. MSME supply their material to all the corporates. Most of the trades platform or whatever we discuss, most of them are not even aware. So if there's any mechanism, the moment they supply to larger corporates and SMS prop up to the bankers and also that MSME, probably it's the right link that client knows that they can get fund against this trade platform or whichever platform. And at the same time, banker also knows that, okay, this party is there. But there's no information gap. We do discuss on various platforms, but ultimately the person who need money do not have this information at all.
So is that an observation, sir, or a question?
It's a question that what can be done to resolve this.
Okay. And I'll hope the panel has an answer, but I can tell you, if you start a fintech, I'll join you on that one. But anyone from the panel?
You will have already multiple fintechs looking in this particular area. Some of them are in the next room, for sure. To my mind, I think there are already people working on this, right? When you look at it from Exim Bank perspective, people have taken up this as a challenge, and if I want to call it as for a want of better word, an embedded finance at the time of doing transaction is something that people are picking up. The problem is the infrastructure, as we spoke multiple times, saying that how do I get this information real time to ensure that there is enough data available for the banks to do credit evaluation at the time of financing. Because that's the must. You don't have lines open, you want to do it at the time of transaction, and the banks will have to do the credit evaluation. That data point, third-party data to get the credit evaluation done at the point of transaction banking or doing the transaction is must, which is what hopefully will get catered through as you streamline the entire digital ecosystem.
And so this is the devil in the details kind of a conversation, right? It has to be more intense as we go about. Room for one more question?
Thanks, the panel. See, today I think we all are proud about payment digitalization. Okay, I don't remember last 6 months I have used Indian currency to give anybody, whether it's a vendor who supplies the vegetables or milk. I think we should all be proud of it. Okay, this is unique. This is nothing nowhere in the world. Okay, so we should be first proud of it that today we don't require physical currency. You know how many transactions happen digital every day?
Yes, more than 50% of the global digitization is in India. I know
India.
that. But your question, sir. Sorry, I'm
Yeah,
running.
second is as far as SME finance is concerned, there are divisions, there are regional offices who train the people, they help you out. You reach to the regional offices and they come to your doorstep, they complete the processes. Okay, so please go to these regional offices and they will help you out. Secondly, see, we have the skill university in under MIDC. We train the students from ITN and we make them entrepreneurs. We tell them how to get the finances. And our job is today, as I explained to you, that the vision of to get 40 million skilled workers, we are here to make 1 million entrepreneurs. And we want to make 100 Tatas. Okay? This is our vision. We are already working on it.
Wonderful. Thank you very much for that. I want to move on to the panel and ask for closing statements. Perhaps beginning right at the end, Sanjay, can I get you to take us off?
The future of, so I'll I'm very positive about digitization, so I'll talk from that perspective to say that, okay, the future of digitization in trade in India is absolutely positive in the next 2 to 3 years. With the global push for implementation of the MLETR guidelines, like I said before, the electronic trade documents will get its legal acceptance, as we say. And coupled this with the legislative tweaks, we'll completely do away with the paper-based redundancies which we have. We'll build a more robust, fraud prevention network, and on top of that, we'll be able to give a seat to the MSME on the trade finance table at a much cheaper rate. One other aspect which I'm very, very positive about is the interoperability, right? Let's talk about interoperability amongst banks, ports, customs, and coupled with the digital infra which, the government is building, like our ICE gates, e-invoice, the GSTN network. This can take trade to a whole new environment as we speak. And last but not the least, with the CBDC initiative, that's the Central Bank's Digital Currency Initiative, which is being worked on. If that gets implemented into the entire space, the trade payments today, which can be done in a matter of minutes as compared to a few hours. Overall, the future of trade is positive. We can reduce the the settlement and the cross-border party risks to a great extent if we are able to do this. So, for me, the future of trade
is positive. Thank you, Torul.
We're all bullish about digitization. Digitization does require beyond technology, participation, adoption, legislation changes, regulations, and having worked with and being currently also working with Ministry of Commerce, I am very, very bullish about the approach that our government is taking. They're taking regulators, required parties in the room, deciding on the ecosystem, and are extremely decisive. So I'm very positive about Viksit Bharat.
Wonderful. Thank you. Aditya?
So probably from my side, it's on? Yeah. So from my side, probably it's a unified portal. Okay, as I call it, it should have core players, which are ADs, customers, importers and exporters, and peer players, okay, which are insurance, logistics, shipping liners. Now, once we are putting them on a single portal or a single system with a unique code, it can be IC, it can be a unique ID for each individual. Some laws which we spoke about, MLETR, or a framework within India based on MLETR will definitely make a difference. I'm quite bullish myself on Bharat TradeNet. Probably it's a step in right direction, and the first 2 points which I spoke about, we can develop through Bharat TradeNet. And if that has to happen, probably we are going to go much, much ahead in terms of trade.
Wonderful. Thank you. Amisha?
So just diverting from what all my co-panelists have said, because all the pressure is on the regulators right now. Each one was
Right place.
Right place. So I would say the regulators will do their job, but it's up to us to stand up, upgrade ourselves, take it positively. Do not just complain that the regulators are not giving us the platform. We can also develop our own in-house platforms. We can see if those platforms are integrated seamlessly with the banks, with the other authorities, and look forward to a positive approach, and not just wait for only regulators to take the action.
Amisha, that is so well said. Digitization begins with us. I can't applaud you more for that remark. Thank you very much. Annapurna, I'll let you take us to the closing.
Yeah, sure. So, couple of points, and one for going ahead with what Amisha said. So, despite all that is there, still the API framework in India is exemplary. There are trade innovations happening in API. We at our company, we kind of have done significant level of automation on cash. Now we have moved ahead to trade as well. And that has enabled us actually to automate our transactions almost close to 90% today. And for a size and scale of this organization, it has given us a lot of productivity benefits as well. Now, the second and more pertinent thing, which we have probably missed covering today is, and there is a session later in the afternoon on Gift City, and how Gift City will play a role in trade innovation, and I am hugely optimistic about that. So we at ArcelorMittal have set up a global treasury center in Gift City. So we are foreign owned. So we are the MNC global treasury center in Gift City. And we are very closely working with the regulators to pull out the reinvoicing circular as well as the physical trading license circular as soon as possible. The reinvoicing circular has already come out. I would urge you guys to actually stay back and listen to the Gift City session in the second half of today, where they should be covering parts of this. But I would tell you that the future of trade is in Gift City in a very, very meaningful way. Banks are all established there. Reinvoicing, forfeiting, factoring, everything has got enabled. And it is for us to use this opportunity and form a part of the global trade using this very efficient system that has got built up there.